We've seen a ripper in the Brent markets in futures. Israel and Iran have re-escalated tensions between the two. You've seen missile strikes not only successfully done from Israel on Iran, which, of course, is a major oil producing country, but you've seen the Iron Dome of Israel be penetrated and attacks on Tel Aviv from Iranian forces. So we had previously been in a range where, if you look on the chart, we were post-tariff news and a huge sell-off in futures. We had Brent, ceiling that this roof was like $69 super comfortably, wasn't getting above there. And then all of a sudden it just absolutely ripped through that. Waking up on Friday morning, you saw prices around $72, $74 per barrel. And then this morning, last night London time on the US Open, on the Brent Futures Open, we saw Brent front month prices going up to 78, almost $79 per barrel. And then this suddenly sold back off to nearer $75 per barrel, $74 per barrel at the time of speaking. One of the reasons for the spike is because of stop outs. Anyone that was a short player, they had the settle on Friday well above $70 per barrel. Risk managers, all right, cool, we'll clean house a bit. So they have to absolutely open, as soon as the market opens, they've got their buy orders in, prices roof. And then you see a bit of a steady sell-off as, people start to question, is this a fundamental, bullish market, etc.? And one of the reasons why I think you could look at this picture and say, no, we're not outright bullish flat price, is because of the damage to supply chains. Yes, there are going to be damages to supply chains, refineries in Iran being hit, export ports going to be hit. But a lot of the pattern of Iranian exports of crude, of products, have been east and over to China, etc. These patterns aren't going to be overly disrupted going forward. One of the reasons why in the Russia-Ukraine conflict you saw crude prices spiking to like $140 per barrel was because of the serious reliance that Europe had upon Russian oil, Russian gas. So when Russian crude and products suddenly became sanctioned, that had an incredibly disruptive effect on supply chains, so prices absolutely roofed. There has been, over the past decade or so, sanctions upon Iran, damage done to Iranian refineries, etc. Iran themselves in 2019 attacked Saudi oil infrastructure. So there have been all of these actions sort of continuously ongoing with Iranian crude markets. And so to have this impact, yes, it reduces supply, but it's not going to be affecting the supply chain of Iranian products as much as previous conflicts have.